you're in charge of helping figure out ways to make ESG more available to people. Some people will say, look, I want to go back the old-fashioned way. I don't want tobacco companies and I don't want energy companies. Other people will say, well, listen, I want clean energy. So if Occidental Petroleum is doing more clean energy work or has a lower carbon footprint than ExxonMobil, then maybe we should include that in an index. There's not a lot of agreement on this. How do you address that? Or are you just comfortable with the idea, there's a diversity of voices out there and let's see, what the public really wants?
Look, MSCI calculates over 1,500 ESG equity and fixed income indexes. And the reason there are so many and they're growing rapidly is because they provide choice. They provide choice to investors who want different approaches to incorporate ESG considerations. Now, sustainable investments is just a very broad category. It's not a binary proposition of whether a company or a fund is ESG or not ESG. But now there are a number of industry bodies and regulators, particularly outside of the US, that are pushing to standardize the market towards a common language to describe some of the key subcategories that are under sustainable investment umbrella. And that's going to help allocators make choices. So for example, a core subcategory is ESG integration approaches. So those are the financially focused ones that are only considering material ESG issues, which ignore a lot of other ESG topics that some investors might care about personally, but they're not financially material. So this subcategory has probably gained the largest traction because they've shown strong performance. They don't necessarily entail too much deviation from the broad market returns. But then you also have ESG approaches that are designed to increase exposure to narrower themes like clean technology or diversity. So those are closer to thematic indexes or strategies. Then, as you said, there are ESG approaches that are more traditional. They're more ethically, oriented, and you can screen for businesses with activities some investors object to. Whatever that is, it could be child labor, it could be tobacco, and it's really important to know that those screens are not incorporated into indexes or funds with the goal of enhancing risk or performance, but with the goal of aligning with investors' ethical values. So it's really important not to mix the apples and oranges when you're talking about these different ethical strategies that may or may not have any element of incorporating financially material ESG factors. So I think the standardization around these subcategories of ESG investments, they are going to help allocators to be clearer about what it is they're choosing or not choosing with respect to both the ESG exposures that they're taking on, as well as the risk and return profiles that they should or should not be, expecting from any given approach.
Yeah. John, it sort of makes sense what Linda is saying. I mean, she's at MSCI, and of course, MSCI is investor agnostic. Their position is we provide the tools and you decide what you want. But I'm wondering what you see here. Is there any indication that investors want a specific kind of ESG? I'm just talking about follow the money. I mean, do they want, as Linda said, some just want more traditional things. I want to exclude carbon companies that have bad carbon footprint or too high a carbon footprint, or is there new stuff emerging? What is the public indicating that they actually want, John?
Yeah, I think it's a great question and great comment so far. I mean, I always urge financial advisors to simplify this. I mean, one thing that I think has happened in recent years is we've seen more and more interest in sustainable investing come up is that the early adopters, the ones that come into an advisor's office and say, I want an ESG portfolio, I want a sustainable portfolio, they're the ones that are going to have maybe thought this through, and maybe they do have a set of very specific sustainability preferences that they want to then, they want their advisor to then address for them. That can be hard because it creates, kind of a momentum for bespoke portfolios for every single client, and every single client can't really have a bespoke portfolio. But I think as this becomes more mainstream and more people just become, aware of the fact that, yes, I'm someone that has a sustainability preference, to the way that I buy any product or service out there. And I've learned that I could do this in my investments. That's really what a lot of people are bringing to the table now. And so what they're looking for from their financial advisor is them to say, okay, we can do this, and here's my recommendation for what you're interested in. So a lot of times I think when somebody has a specific issue that they bring up and they come to the table with, that may just be the only issue that they, know to bring up. It doesn't mean that they're necessarily going to be opposed, for instance, to a broad-based, diversified portfolio that emphasizes, ESG, kind of broadly speaking, and not necessarily focused just on a list of things that they, personally would want to excise from their portfolios.
Kim, same question for you. I mean, it sort of goes back to the question I asked you before, but what are you telling people? They want ESG. What are you recommending? What do you see they want? Is the public voting with their feet in terms of what style of ESG they want?
Yeah, Bob, definitely. I think there's clearly a huge overlap with ESG and quality and growth. That's good. And that means if we break the E and the S and the G up and take the two bookends, the E, the environmental that we talked about, that tends to be companies that are disruptive technologies that are doing something good. I'd mentioned before food production, plant-based protein or lab-grown protein. That's going to be less water that's used, less land that's used, less methane gas that's going to be emitted. So that's a growth industry because it's disruptive and people are moving that direction. And then when you look at the quality side, that kind of covers the G, the governance side. And again, it's historically been that governance is best practices. And that means, like for myself, I'm a fiduciary. And if I or the companies I'm investing in are treating employees well and treating the clients well and treating the community well, those companies are probably going to do well. And so I think what ends up happening from a broad-based perspective, Bob, people will come in and you look at something like DSI, which is probably one of the oldest ESGs, but it's 2/3 technology, healthcare, and consumer discretion. And it's a reason. Those are the quality and the growth areas that come out of it. And then if you look into the ESG emerging, the ESGE, which is only about 4 years old, well, that's overseas emerging. It's about 53%. It's actually outperformed its peer in the emerging market category. So we definitely have that. We've seen people for animal, pet care, PAWZ, PAWS, right? That's doing something good for themselves, doing something good for the animals. So I think we're seeing a lot of that, and we have a sector rotation strategy, SECT, that's the same thing, technology, healthcare, consumer discretion, about 2/3, and a lot of them are ESG compliant pieces.
And yet, John, am I being curmudgeonly by pointing out that among the largest ESG ETFs out there, they all own essentially the same things in terms of their top holdings? Look at the top 5 or 6 ESG ETFs, US-based. They all own Apple, Microsoft, Amazon, Facebook, Google, Procter & Gamble, Johnson & Johnson, Visa, and most of them own Tesla as well. These are all great companies, but there is a... Am I being curmudgeonly pointing this out? I think a lot of people will be shocked to find out that Microsoft is such an ESG favorite, and so is Apple, for example.
Well, I think it is true that when coming to the table, I think a lot of investors think that they may be asking for a really fundamentally different kind of portfolio than they would otherwise be getting in a standard, market-based mutual fund. But I think it's probably better to both, explain to those investors as well as just to think of it in these terms that it's really, an investment first, and the ESG tilt is secondary to it. I mean, primarily what you're doing, it's like buying a Tesla. You're primarily buying a car. Right. And so I think with your investments, you still need, and most investors still need, right, core exposure to major asset classes in the marketplace. And you can do this through traditional investments. You can do it with an ESG tilt. And the advantages, I think, of having ESG tilt are, as Kim mentioned, the sort of long-term quality component. I think if there's anything that ESG indicates, that's one of the things it does indicate. It also intends to include, or in terms of probably overweighting in most cases, exposure to the sort of cutting edge companies that are going to be delivering the products that are going to really drive a sustainable economy in the future. And then there's also this other component called that we call stewardship or active ownership or shareholder engagement that some ESG investments do more so than others, and this can be very impactful as investors are essentially pooling their money, and the investment manager is engaging with companies about their ESG practices, encouraging them to do better. And we've seen a lot of indications that that's been successful. It's been happening more often. The proxy voting is more. There's more shareholders voting proxies in favor of ESG resolutions now, and so that's a differentiating factor that could also be, that could also come into play in selecting investments that are ESG oriented.
I think, just to conclude my curmudgeonly commentary on this, I'm not the first one to notice that the biggest ESG funds tend to mimic quality funds, QUAL, that kind of thing. And that probably is a good thing, but I stand by my assertion that a lot of people will be very surprised to find out that Microsoft and Apple and Google are favorites of the ESG investing.